Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about the Bank of England's meeting next week. You see, the Bank of England are meeting on the 6th of February this year, and they're going to be talking about interest rates. In this video, I want to talk about what's the likelihood of them cutting, what have they got to look at in order to make that decision, and where does the data sit at the moment? Now, why would you care about this? Well, if you have a mortgage or you're looking to buy a property, then this will impact you massively. Rates dropping will improve affordability of properties. Now, if you're renting a property, this also impacts you because your landlord probably gets hit quite hard and has been hit quite hard over the last few years with higher mortgage rates. If rates come down, that will ease the squeeze on landlords that they're seeing at the moment, meaning that rents don't need to go up at the alarming rates that they have been over in 2024, where rents went up more than 25%. So we're going to cover all of that and more in this video. And if you're new around here and you haven't done already, do subscribe to the channel over there and hit that bell notification. We're a smidge away from 36,000 subscribers, and 3,500 of you have subscribed this month alone. So thank you to everyone that subscribes. And let's get some more views on this video so we can grow that subscriber base. How do you do that? Easy. Smash like, tickle like, do something to that like button. That massively helps with the YouTube algorithm, and I appreciate everybody that does it. So, what is going on at the moment? Now, the Bank of England have a really difficult decision to make, in my opinion, this month. Now, the Federal Reserve, the Americans, they are already ahead of us with rate cuts. They're at 4.25, we're at 4.75, meaning we can cut 2 times and still be relatively close or exactly where the Federal Reserve are. So we are sitting at a base rate of 4.75%. We peaked out at 5.25%. We've had 2 cuts starting in the 1st of August of 2024. And that did stimulate the market. It allowed lenders to cut rates. It was a positive sign, and it did get more transactions to start happening. In fact, the property market right now is quite busy, but the expectation is that it will slow down from April because of higher stamp duty and the fact that rates have a bit more uncertainty around them now. Now, what do the markets think? What's the expectations here? Now, 92% are saying rate cut. 92% of economists are saying a rate cut. Now, why is that important? Now, if that signal was out there and was totally wrong, and it was not likely to happen, the Bank of England do have ways to just, in speeches that they do, which are happening all the times with various members on the Monetary Policy Committee, they would say, it's unlikely, things have changed, we've got uncertainty in America, uncertainty in the UK, but they're not doing that. And so that indicates that likelihood is that we will get a rate cut next week. And that's what I believe. I think the markets are right in this instance, and I think we can do a rate cut without impacting too much that's going on the global stage at the moment. Remember, we are 2 cuts behind the Federal Reserve, so we have that in hand that we can do that. Now, we've got uncertainty at the moment with the jobs market. That is something that is cooling down massively. Now, the Bank of England's primary focus is to bring inflation down, but they should be looking at both parts of this. The economy is cooling down for sure. We narrowly avoided a recession with a 0.1% growth, which is nothing. And also that could get revised later, and it could have been, for example, a drop in growth. You never know until miles and months after this has happened. But one thing that is happening is the job market is cooling down. You've got Sainsbury's that have gone public with huge job cuts. You've got other supermarkets saying they have or do intend to do the same because the budget is going to start hitting the economy soon. You see, in the budget in October, we had a national insurance hike, we had a minimum wage hike, and lots of businesses can't afford that at the moment with energy costs still at record highs. We're 4 times higher on our energy than a lot of other countries at the moment, and that makes business really, really tough to be done in this market. So the economy is softening, the job market is softening as well. Will the Bank of England take that into account while inflation is still above the target? It's currently sitting at 2.5%. I think they will. And as long as their data that they're looking at says they're not expecting inflation to run away again, I think that they will consider and will implement a rate cut this month. Now, Goldman Sachs, a big investment bank, what are they saying? And so Goldman are saying they think there's going to be more cuts than a lot of people think. They're saying 6 cuts. And they're saying that those 6 cuts will happen by the spring of 2026. So they're saying the year will start fairly slow. We'll get a cut this month. Then we maybe get some cuts late spring. But they're saying that that will start to accelerate at the back end of this year based on the fact that the jobs market's cooling, the economy is not looking great, and it is likely that we could move towards or really be very close to having a recession in the country. Based off that, Goldman Sachs thinks that the Bank of England will start to cut rates a little bit faster, and they will have 6 cuts. So that's something to keep an eye on. Do the other analysts and markets expect that? We'll see that over the coming months. Now, poor consumer confidence is something to consider as well here. In all the surveys at the moment, the consumers are saying they're not excited about spending money. They're being cautious about what they're looking to spend money on. They're sometimes downsizing in purchases and buying the cheaper products and cheaper alternatives. That doesn't indicate that companies are going to do particularly well in the short term right now. And we do have a lot of uncertainty at the moment, whether you like him or whether you don't. And I know in the comments it is very 50-50 on this. Donald Trump is giving global uncertainty at the moment. He's saying he's going to tariff Canada. He's saying he's going to tariff Mexico as early as Saturday this week. But we still don't know if that's definitely happening or if that's just negotiating or bluster and it's going to be something that he backs down on. We don't know. He put a 50% tariff on Colombia this week, and that was removed pretty much instantly as well. So who knows what's going to happen? But what I do know is while we've got uncertainty like that, markets aren't happy, consumers aren't happy, and so spending does look like it will slow down. The UK government is also not doing much to help itself because we have no real plan to grow our economy. It looks like we're just going to get taxed even more at the end of this year, which will slow down spending even more. So it's interesting to see what is likely to happen. But in a nutshell, I think that the Bank of England will cut next week 0.25%. The markets also think the same. But I don't think, as the video that I made yesterday, which you should go and check, I don't think this is going to have a massive impact on your mortgage payments unless you have a tracker mortgage. If you're on a tracker mortgage, your rate will drop instantly. Let me know your thoughts, questions, observations, and opinions in the comments below. Do always comment on the videos, even if it's just to say hi or thanks or anything you can suggest that you want a video made on. Do smash like, do subscribe, and check out all the other content on the channel, including this video right here.